Welcome, everyone, to Leading Indicator, a show by Public.com focused on keeping you informed on financial news and ideas. I'm Nora Ali, and today we're discussing the future of Bitcoin in the wake of institutional adoption and the Bitcoin spot ETF releases. Don't forget to like, comment, and subscribe to our YouTube channel for more in-depth interviews that will help keep your portfolio on track. Today, we're here with Vijay Boyapati, author of The Bullish Case for Bitcoin. Vijay, welcome to Public. Thanks for joining us.
Thanks for having me, Nora. It's great to speak to you.
All right, a lot to get to, so let's get right into it. There has been a wave of, I guess, renewed enthusiasm amongst the crypto community after the spot Bitcoin ETF was approved by the SEC earlier this month. So just to level set, what exactly is a spot Bitcoin ETF and how is that different from investing, say, directly in Bitcoin?
That's a great question. So this is, I think, a historic moment for Bitcoin because it provides access to retail investors for many of whom find it very difficult to understand Bitcoin and how to set up a wallet and all the technical details of actually trying to own Bitcoin. So what this means is that retail investors can now go to their brokerage account, be it Vanguard or Fidelity, and they can buy exposure to Bitcoin as easily as they could buy a Google or Microsoft or a typical index fund like the S&P 500. So this really makes it a lot easier for retail investors to get exposure to Bitcoin.
Got it. So specifically, what are some of the various spot ETFs that are now available? What are the companies that have released them? Give us a little bit of an overview.
It really is a who's who of large ETF providers. There's Fidelity, there's BlackRock, there's Van Eck. There's I think about 11 total. There was a lot of them. And just to give you some context, the ETF launches that happened just a week or so ago were historically successful. The amount of capital that flowed into these ETFs on the first few days was greater than anything that's ever been seen and really dwarfed any other ETF launch. So there's a lot of public interest in these ETFs. And like I mentioned, a lot of these major financial players have launched their own ETFs.
Mm-hmm. And if you're an investor who's new to, Bitcoin generally, or looking into these Bitcoin ETFs, what is the difference between them? How do you assess? Do I go with the BlackRock one? Do I go with the Van Eck one? What are the attributes that you look at?
Yeah, that's another great question. So the big gorilla in the room is Grayscale. They have the most assets under management, and Grayscale has the most assets under management because they had a Bitcoin fund which already had assets under management that was converted to an ETF. So assets under management is one of the big variables because that is kind of a proxy for liquidity, how much is trading on the market. And you typically want to own the most liquid ETF because you're not losing as much when you buy or sell it. The bid-ask spreads on the ETF are very tight, so you don't lose much in trading it. Then you have reputable players like BlackRock, which has already gathered a lot of assets under management, over $1 billion. There's Fidelity, which is one of the biggest mutual fund managers on earth, has trillions under management. I think another one of the big variables that you want to look at is not just reputability, but also the fees. There's kind of been a fee war between all these ETFs where in competing with each other, they're not just using marketing, they're lowering the fees to own these ETFs to incredibly low numbers. Some of them have offered 0 fees for the first 6 months of ownership, which is, again, sort of unprecedented to see this kind of thing on ETFs. Like for instance, the gold ETF has an expense ratio of 0.4%. So 0.5% of your assets get taken away in fees every single year you own the ETF. I think the average fees for the ETFs that have been launched is somewhere in the order of 0.2%. Which is very, very surprising. I think a lot of people assume that because this is sort of an esoteric product and Bitcoin is still not, very widely owned, that the fees would be very high. So another variable your listeners might want to look at is the fees that they would pay. So I think it was a combination of fees, reputation, and liquidity would be the three big variables I would look at if I was considering purchasing one of these ETFs.
To what would you attribute the participation so far in these ETFs? You said, there's been a lot of volume, there's been a lot of interest. Is it because you think there's been pent up demand in just investing in Bitcoin and that hasn't been as accessible as these ETFs? What would be your reasoning?
Yeah, there's a number of factors involved. One is pent-up demand. There's a retail public that wants exposure to Bitcoin, but for instance, my parents wouldn't really be able to figure out how to set up a Bitcoin wallet. And the process of going to one of these Bitcoin websites like Coinbase and going through, KYC, which is this sort of government requirement for the company to collect your passport and your name and your address. This is something that most people are kind of unfamiliar with doing. They don't do it very often. And so it's a big barrier for people to do that just to get a little bit of Bitcoin in their portfolio. For most people who are investors, they have a brokerage account. And so there's no extra setup. They can go to their brokerage account and buy one of these ETFs very easily. So I think there was a lot of pent up demand from retail investors to just be able to buy Bitcoin in their brokerage account. I think another factor is there's a lot of institutions who just there were regulatory reasons they couldn't buy Bitcoin directly to own the physical Bitcoin, and so having an equity-based product that they can buy and put on their balance sheet, that makes it a lot easier. So there's a bit of that as well. So I think it's a combination of pent-up retail and institutional demand, which explains the very large inflows of capital into these ETFs.
On the topic of institutional demand, why is institutional adoption so important overall for the success of Bitcoin and crypto overall?
Well, I personally view Bitcoin as a better form of money. And I think my thesis is that eventually, I think it's going to take decades, but I think Bitcoin will become the reserve currency of the world and eventually displace the US dollar as the world's reserve currency. Now, for that to happen, that's going to involve a lot of retail adoption, institutional adoption, and even nation-state adoption. Nation-states are going to have to acquire Bitcoin and hold it in their foreign currency reserves. We're seeing a very small inkling of that right now. There's one nation which has already started doing this, and there's a handful of corporations which have also started doing this. But I think this trend is going to grow rapidly as Bitcoin becomes sort of more normalized and integrated into the financial system. And the approval of the ETF is a big step in this process.
I want to get your take on the comparison to gold, comparing Bitcoin to gold. But first, I just want to zoom out a little bit because you said that you think Bitcoin crypto overall is a better form of money. You've also said before that one of the most misunderstood questions in economics is, why does Bitcoin have any value? So just zoom out. Why is Bitcoin a better form of money and what gives it value?
Yeah, this is a really hard question for most people to wrap their minds around because they sort of take for granted that we have money in society and they don't think about where money comes from. And money is not valued like other assets that people traditionally think about. Most assets are valued on their cash flow. They're valued on, how much rent they produce if you're in real estate, or how much interest they produce if you own bonds, or how much dividends they produce if you have stocks. And that's pretty easy to understand. Like a house is valuable because it produces a lot of rent, for instance. Mm-hmm. Money is not valued at all like that, and it's very difficult to think about. Money is valued based on the functions that it provides to a society, and these are things people may have heard of these: store of value, medium of exchange, and unit of account. We need a money in society because if we don't have money, then we can't have the division of labor. And what makes a good money? There are certain attributes that have been known for a very long time, since the time of Aristotle, who wrote about these attributes. Things like divisibility. So you want your money to be easily divided into small pieces. So for instance, gold is much better money than a cow because it's really hard to divide a cow into pieces. Other attributes of fungibility. So you want one unit of this money to be equivalent to every other unit. portability. You want to be able to transport your money to conduct trade at long distance. And I think the most important attribute that makes for a good money is scarcity. Money that is not scarce will eventually fade into worthlessness. And this has been seen throughout history. When governments produce a lot of money for political reasons, their money goes into this process called hyperinflation, where it's no longer valuable. And, you see there are famous pictures in places like Weimar Germany and Venezuela and Zimbabwe, where people are moving around money in wheelbarrows because it has no value. Bitcoin, for the first time ever, is a creation of a new money that has ultimate scarcity. The supply of Bitcoin is completely fixed. There will never be more than 21 million Bitcoins. And this actually makes it even more scarce than gold. Gold is scarce in the sense you can't print more of it. Governments can't create more of it, which is historically why gold functioned as money for most of human history, because humans really value that. They want to keep their savings in something that can't be produced easily at the press of a button. Bitcoin is even scarcer than gold. Gold's inflation rate is somewhere around 2% a year. 2% more gold is mined every year. Whereas with Bitcoin, we know that the supply is completely capped and will never go above 21 million. So fundamentally, if you look at the attributes that make for a good money, Bitcoin excels across all of the attributes. And this is why it's out-competing its monetary cousins at the margin. People see these attributes and they say, wow, I can have something that's never going to increase in supply. And so the more I acquire of it, if it becomes a reserve currency, the wealthier I become. So as adoption grows, the value of Bitcoin grows because the supply is fixed. It's a very attractive property for something to save your wealth in.
What are some of the learnings from physical gold's ETF wave in the early 2000s that we can apply to this new wave of Bitcoin spot ETFs?
It's interesting to go and look at the history of the approval of the gold ETF and the impact it had on price. Actually, in the first 6 months or so, it had very little impact. The price of gold didn't move much at all. It just kind of went sideways for about 6 months. But in this 8 or so years after the GLD ETF was approved, it was approved in 2004, gold went on a historic bull run and I think increased in value by 5x over that period. And that's 5x on an asset which is already very big. It's $1 trillion asset. So that was a very profound impact on the price level of gold. I think the ETFs will have an even bigger impact on Bitcoin because it starts off as a smaller asset. Where it ultimately ends up is anyone's guess. But my view is that in the sort of short to medium term, I think Bitcoin is going to attain and surpass gold's market capitalization because these two things compete very directly with each other. They're both apolitical stores of value. That is, stores of value that are not controlled by government. So they have very similar use cases. And I think people are going to increasingly recognize this. So I think Bitcoin is going to take a very large chunk of gold's market capitalization in the next, say, 5 years.
So looking at the performance of Bitcoin after the announcement of the ETFs, Bitcoin's price has dropped around 7% since the day of the SEC's approval, but it's still up around 3% since the end of December. To what do you attribute the drop since the announcement, and where do you sort of see it going in the next couple months?
I think this is just how markets work. People were incredibly excited about the announcement of the ETF and they sort of got a little too enthusiastic and markets got a little ahead of themselves. There are other factors, I think, which played into this as well. Like I said earlier in the show, there was a very large inflow of capital into the ETFs, which you would expect to increase the price. However, there are a number of companies that operated in this sort of cryptocurrency space that went bankrupt in the last year or so. And a lot of them were holding Bitcoin or the Bitcoin fund that Grayscale produced, GBTC. And in the process of bankruptcy, they had to liquidate these funds. And the approval of GBTC as an ETF gave them the opportunity that they needed to liquidate. And so that particular fund, GBTC, saw gigantic outflows, which almost completely offset the inflows. And a lot of these outflows came from the bankruptcy estates liquidating their holdings to pay out creditors in the bankruptcy.
I see. Lastly, before we let you go, are there any other key events, milestones, catalysts that you're looking ahead to that will impact either the performance of the Bitcoin ETFs or just Bitcoin overall in the crypto market?
Yeah, there's a big event that's going to happen in about 2.5 months. It's called the Bitcoin Halving. And by design, Bitcoin has this event where the amount of Bitcoins produced per day gets halved. So the amount of Bitcoins, there's actually something where Bitcoins are mined. And right now, the amount of Bitcoins that are mined is 6 Bitcoins approximately every 10 minutes. That number is going to halve to about 3 Bitcoins. And this will be the first time that Bitcoin's inflation schedule, the amount of Bitcoins being produced per year, drops below gold. And it will continue to drop by design. And this event, the halving, is typically a precursor to these bull runs that Bitcoin goes on. It goes through these cycles where there's a period of a bear market, you could say, where it's flat or the price is declining, and then the halving happens, and then the price starts slowly creeping up, and then it gets into this period of the madness of crowds, and the price goes into this parabolic move and a crescendo and eventually a crash. And it usually crashes down to a level that's much higher than the previous cycle. This has, happened 3 or 4 times now. So this is a much anticipated event. It's going to happen in about 2.5 months, and I expect it's going to trigger, the next bull cycle in Bitcoin.
To back up for those who might not be familiar, why does Bitcoin halving happen?
It's by design. It's part of the design of Bitcoin to make the supply limited, is that the inflation rate of Bitcoin keeps halving and keeps getting smaller and smaller and smaller. And 100 years from now, the inflation rate of Bitcoin will drop to 0, and then there will be no more Bitcoins produced.
All right. Vijay Boyapati is the author of The Bullish Case for Bitcoin. Vijay, thanks again for your time. We appreciate it.
Thanks, Nora.